moving on. Discovery, actually a financial services company, operates in the health and wellness industry though, so we've got to talk about it when we talk private healthcare. Started in 1992 by the legendary Adrian Gore. Medical Aid Administration, yes, that's the beginning, but it now is an insurer, makes more money in fact on life insurance, and an asset manager, and they've got a banking license that's coming in there, and they're in short-term insurance. Remember where they operate, here in South Africa of course, but they have that big business with the Prudential in the United Kingdom. United States used to be bigger, but is now just that thing called Destiny. And then they've got joint ventures in Asia with a company called AIA in Singapore, and Ping An, which is like the old Mutual of China. You put all of that together, you get to a market cap for Discovery of just shy of 50 billion rand. Price to earnings ratio apparently 22 on the recent results. Dividend yield of 1.3. Rob, I mean, they made a bit of a fluff though with the most recent results. There was that sort of saga about the trading update, and the share price recently has been a bit raggedy, huh?
Yeah, sure. People definitely took some money off that out of that Discovery trade, but I mean it's still done phenomenally well.
Yeah.
I think from about 35 rand, it was virtually a straight line up to 100, and now it's consolidating just below 80, around 80 rand. It seems to be supported around 75 rand, and it doesn't really want to go lower than that. So it looks like the buyers that exited at 100 are happy at around 75. So. Yeah, the earnings weren't great. Change of accounting policy or...
Something about like accounting for the reinsurance profits and so on. Because of course, this is really an insurer. So where people expect sort of a steady administrative business, the insurance element does introduce a bit of accounting related complexity.
Yeah. But you know, they're pushing the boundaries of insurance, and it's putting pressure on all of the other players. They've got new products coming up all the time, slightly different. So they're still innovating, and because they're innovating, people still like the stock, even though they've run so much.
Yeah. Well, let's talk about the sort of IT and intellectual property content here. What they critically did with Vitality, of course, was to work out that if you track people's medical spend and you incentivize them to behave a little bit more cleverly with regard to their eating and their exercise, that also gives you quite a nice in to understand what the risks are associated with their life cover, their longevity and all of that stuff. That IT system-driven approach looks to be a very valuable thing in healthcare, because healthcare across the world, huge sums being spent and everybody's looking for more efficiency. So that just looks like a very strong core element here with Discovery, no?
Yeah, absolutely. And it's from the medical aid side, obviously it reduces the payments that they have to pay out. But also on the insurance side, they can see, well, you know, this person's never going to have to use their insurance. Their lifespan is probably broader than the average now because they've got all of this detail. So it fits nicely into the life insurance business, as well as it incentivizes their clients not to use the medical aid as much, so they don't have to pay out as much as some of the other medical aids.
So what feels to the user like a positive experience and lower premiums and so on is in fact very, very good for their margins too, because
Absolutely.
you know, you think you're doing well going to run a half marathon and get 5,000 Vitality points, and you feel like you're getting a benefit on your lower premiums for your healthcare, but what they're actually getting is someone who can run a half marathon. So you know, you're not going to die.
You're not going to die. You're not going to have be too sick. Hopefully, if you're fitter, so they have to pay out less and less.
These Asian ventures though, I mean, AIA, very big player in the Asian market insurer, Ping An also. I mean, these look like sort of technology tie-ups. Does that look to you like the right way for these guys to go global? I mean, they'll earn fees and profit sort of
so I think
share.
they're taking some of Vitality's and putting them into these players.
On some sort of incentive type deal, right?
Yes,
the bigger savings for the insurer, they get a portion of it.
So obviously with China, not many people actually succeeded that much in China. So if they get it right, it's going to be a massive boom for the business. They're going to get a really huge revenue from it. But the take-up from the Chinese and the Chinese culture doesn't seem to always fit the Western culture. So we have to see if that's going to work. If it does, though, it's a very big market for them. On the AIA stuff into Singapore and Asia, that I think that will do very well, and it'll happen much quicker. China is quite a difficult place to do business.
And then changing gears, what about the UK? Because they've been there a long time. You know, I mean, Britain, I don't know, they just qualified for the World Cup yesterday. The English are feeling positive. I mean, is that economy for you a place where you want levered plays on the discretionary spending cycle? Maybe?
I think you
Timing's
do.
not too bad.
Yeah, they've come off a very low base. We see the whole of Europe turning around, including the UK. I think both on the index side, the UK and EU areas actually slightly outperformed the States over the last few months. So you're starting to see a turnaround in those whole economies. So I think it's a good place to be, and they've weathered the storm.
Okay, good. So By extension, with the price down, are we hot on this one as well?
Still hot on Discovery.